love municipal bonds. Municipal bonds are really fun. Fun, 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 fun. Municipal bonds confidential.
In this episode of Municipal Bonds Confidential, I will begin discussing the risks you should be aware of before purchasing municipal bonds. I must unfortunately make clear this is only the beginning of a municipal bond risk discussion because there are now many risks attached to municipal bonds, the states and cities that issue them, the specialized Wall Street financial advisors who counsel them on what to do, Wall Street public finance bankers, the municipal bond new issue process itself, the secondary municipal bond markets, etc., etc. The list is long, and I have not even mentioned our federal sovereign Congress, nor tax authorities. Be forewarned. The overall discussion on municipal bond risks will not be short nor quick and will require many, many episodes. For now, let us just cover the traditional if not fundamental risks known to municipal bonds. This list is shorter. Traditionally there were two basic risks, credit risk and interest rate risk. Before I start discussing credit risk, I want to make clear that municipal bonds are not deposits. They are not a bank savings or checking account. Municipal bonds are negotiable investment securities you purchase and either hold to maturity to get your principal paid back, or because they are negotiable, you have the right to sell them to get back your principal investment. It is not as though you can walk into your local bank branch and ask to cash out your municipal bond for full face or par value. You would have to sell. That is what negotiable means. Municipal bonds are investment security products which are bought and can be sold and traded before maturity at market price. More specifically, you sell at secondary municipal bond market, or Muni Market, price. As such, the price of your municipal bonds can and do go up and down. If you do not easily see price moves in the opaque and complicated Muni markets, you may see the value of your municipal bonds fluctuate in your portfolio statement. And you will wonder why. You will think municipal bonds are fixed incomes. This is not the stock market after all. And the prices of bonds and fixed incomes are not supposed to go up and down. Risks can explain and be the reason why the price of your municipal bonds may drop. To apply this, risks can explain why the price of your municipal bond may decline from 100% of par value to 90%, for example. Better put, risks can explain why the price of your municipal bonds may go down from an original investment amount of $10,000 to $9,000. Or worse. Credit risk is a real thing. It has always been. How strong a financial position is the state or city you plan to loan your money to by purchasing their municipal bonds? What is the likelihood of the state or city to make good your semi-annual interest payments and pay back your full investment or principal amount at maturity? A credit problem of any kind could place bond repayment into doubt and cause the price of your municipal bond to go down. Traditionally, the creditworthiness of municipal bonds and states and cities was generally thought of as great. Almost above question. Financials were good. Even great. There was tax and fee revenue. Expenses were reasonable. Spending was in check. There were budget surpluses. And the surpluses were not a one-time thing. Also, acts of financial fraud, while always being a thing, had really not developed. Other concerns were few and accidental or catastrophic in nature. Was there a tornado or hurricane or earthquake? Or a fire? Or a bridge failure? Or dam break? A material event like any of these would impact a state or city financially and its municipal bonds. It could cause the price of municipal bonds to go down. Today, the creditworthiness of municipal bonds and states and cities is just not the same. Many things have changed. There are countless more moving parts. There are more fine print details. Financials are far from great or even good. Tax and fee revenue has not kept up with ever-increasing old and new expenses. And budget surpluses are a thing of the past. In fact, if there is a surplus, the concern is why and how bad will it impact next year's budget. Any of these credit concerns and many more could cause the price of your municipal bonds to go down. Also, and this must be said, while historically and traditionally it was not really a consideration, the idea of municipal bankruptcy and municipal bond bankruptcy are now actual concerns. Please note the term material event. This is important. A material event is anything that could impact, usually in a negative way, the creditworthiness of a municipality and/or the market price of its municipal bonds. If anything happens that impacts the creditworthiness of the municipality whose bonds you own, you as an investor are supposed to be informed of it. Next on Municipal Bonds Confidential. Something that could even be worse than municipal bond credit risk. It is called interest rate risk.
I love municipal bonds. Municipal bonds are really fun. Fun, 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 fun. Municipal bonds confidential.